Okay, so this is market review for Monday, December 11th. Um, we had, a long setup last week, where market, drove down on Friday NFP, tapped into where Thursday longed from, and then gave us the long structure, rebalanced price at lunch hour, and then shot up and it held a very important level. So my eye was here today. So coming in, we saw market dropped off at open, and then we had this FEG built up over here on the 15-minute time frame. Actually, I think it was the 1 hour time frame. So that's that FEG right there on the 1 hour time frame. So my eye coming in today at 6 a.m. was right there. I wanted to see how price would react in that area. So when I go down to the 15-minute time frame and I look at price, I saw that price reacted off of this level on the 1 minute time frame, pushed up as this candle was painting. And I talked about how this is going to be used as an inversion FEG now. So what I did was I waited, it pushed up. Now we could go down to the 1 minute. 1 minute pushes up and then drops down, touches inversion, takes off from there. So automatically, I know that anyone that's entering longs is probably entering somewhere in this area because no one has the balls to enter over here. Okay, only the highly skilled will have the balls to enter positions in this area. And in these two candles right here, those are the guys that know what they're doing. Okay, so the chances of them getting tagged out is very low. So when we're watching this and we see that it's creeping up and it's pushing up, I was watching this. Basically, from here, from this area, it needed to drop off and it needed to continue down if it was going to shift the structure. So that's why when this candle came in, it whipped down real quick, and then you got this candle whip down, push up, and close like that. Anyone that's watching this day is thinking, okay, that has to be the long right there. And that's the more skilled individuals. These guys, they're just idiots in this range. Like, yeah, taking this over here, you have to understand that, it's probably not going to reach TP, which was a great exit. I took this, left took this over here for that long side. But again, since it's Monday, it's low risk Monday. We're not going to risk too much. You're just trying to take a quick move, be done, and you're not going to be anticipating that, this could be potentially the low of the week, which it could still be the low of the week. Tomorrow's CPI, there's a lot of things going on this week. So we have CPI tomorrow, we have FOMC Wednesday, we have news pretty much every single day of this week. We have PPI the next day on Thursday. We have I think unemployment claims on Friday. So it's just an action-packed week with news and different drivers that are going to be coming into the market. So my eye was on all of these levels that I have marked out over here. The inversion on the 1 hour, and then we had this 1 minute FEG over here that I had marked out, and then this is the 5 minute FEG that I have over here. So when we saw this thing drop down on the 5 minute, I'm going to show you where it reacted off of. On the 5 minute, we were holding these candles. That's why you got that big whip down. But what did that do? It just tapped into the 15-minute inefficiency left behind in price from this high to this low. So it taps in there. And now, since I know that this is a major area that this price can react off of, I'm paying attention to see how the 1 minute candles are going to close in this area. So let's look at the psychology that takes place in this area. Basically, what happens is this. You have this candle react very heavily, moving to the downside. If you watched how that candle painted, it was very harsh. It went down very quickly. So anyone that entered short, their order went anywhere in here like this, right? And then where's their stop? Above that candle. Okay. Anyone that's long saw this candle, the bullish hammer over here, and as soon as that candle closed, they're feeling FOMO. They're like, it's gonna go, it's gonna go. So they pop it in as the candle closes, and immediately as that candle closes, the next candle just whips down past that candle. So stops are triggered there. People that were a little bit smarter, they're like, okay, I'm gonna take longs again, and I'm just gonna, as this candle is pushing up, because I don't want to see it even trade down below that candle's wick. Let me delete some of this stuff. Delete that too. They don't want to see it past this candle's wick. So what do? This is the right leg of this model. Taps down past that area one more time. On this candle, you're already getting confirmation that this thing is going to long. Because in this area, that should be institutional order drill. How do you identify institutional order drill? When this candle whips down after that candle, you need another bear candle, something like this. Not something like this. Something like that would still be very sketchy. So I need a big bear candle after that candle. Did we get a big bear candle in this area? No. There was nothing that snapped down to around this level, which is that major line that I have marked. So when I'm watching this area, I'm already anticipating that, okay, they've convinced everyone that either this is a short or it's just going to retrace too short. So I know that this is last tick territory to do what? To long. We talked about this on session. This is last tick territory to long. Now, where is my target? My target is a level somewhere up here, which on the 4-hour chart, if I go to the 4-hour, I'll show you after the annotations. But if I go to the 4-hour, there's buy side up here, which was where I was telling the boys that it was going to reach up to on this leg. But we saw some resistance here, and then price started to drop down. So it's very obvious that they're going to come in and take liquidity off of all of these lows and levels that we have left behind in price. So my anticipation in this area is its last tick. Now, let me clear everything. When this thing is pushing up, this is the breakaway gap. That's the breakaway gap. So once I see this candle trade into it, and then all these candles in this area are holding this level, and then it starts to pop up. Basically, I was thinking, okay, it's Monday, it's low risk Monday. If I do want to take a position here, I'm very confident that it's going to be a long from this area. I want to pop it in anytime I see one of these candles painting and it pushes down. So whenever I popped in my entry, it went in right here on this candle, this very candle. As soon as I click the button, it's in profit. My stop loss goes right here. And from there, I'm just waiting to see how going into lunch hour, this thing is going to trade. Because I'm anticipating liquidity buildup over here. I'm anticipating liquidity buildup over here, over here, over here, and eventually the target up here. So once this candle had this hard push down and then whipped back up, and you get this candle closing, that bull candle right there, that's when one of the guys entered right there. That was his entry. So he entered right there. His stop probably went somewhere over here. And then you're anticipating for this gap to get filled immediately. 1, 2, 3, 3 1-minute candles. In 3 minutes, it filled that gap. From there, I talked about how at 9:30, just wait to see if there's a potential for reversal. We couldn't do it. Look at the volume imbalance candle. We couldn't do it. We couldn't break it. If this broke, use this as resistance, this thing could have been heading back down to take out anyone's stops that were in this area. But it didn't. So it continued to reach up, took out these guys, took out these guys, took out these guys, and then now we're up here. So the anticipation was all there. If it's not going to short, then it's going to long. Where is it going to long back to? Well, where are people's stops at? All those levels that I've marked on this side of the range. that is our market review. I'll probably post that one on YouTube, but let me end the recording.